Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're looking at the Q4 2025 earnings call from ARM Holdings. Quite a significant one, giving us a really detailed picture of their financials and, well, where they're headed.
Absolutely. This felt like more than just the usual numbers update. It really showed some important shifts and underscored ARM's growing weight in, several key tech areas.
Yeah, definitely.
We should probably unpack what these figures in the announcements really mean, from the record revenues to their bigger role in things like AI and automotive.
Okay, let's start right there with the headline numbers. They really jumped out. Sounds like an exceptional quarter and year, financially speaking.
Landmark, I think, is the word. First time ever, over $1 billion in quarterly revenue.
Wow.
And the full year topped $4 billion, another first. Even royalty revenue just from chips using their designs went over $2 billion annually. That's quite something.
Those are seriously impressive figures. And it wasn't just the annual total, right? The final quarter itself set some records.
Exactly. Q4 royalty revenue hit a record $607 million. And what's interesting there is it kind of suggests they're getting more value out of each chip shipped.
Right. A higher rate, maybe?
Yeah, possibly higher rates
Yeah.
or just more valuable IP per chip. It points to, a stronger market position. And then on top of that, licensing revenue also hit an all-time high, $634 million for the quarter.
$634 million in licensing. What was behind that surge?
Well, a big part was new licensing deals. There was a notable AI partnership mentioned with the Malaysian government.
Interesting.
And that's maybe more than just one deal, right? It could signal a trend where governments see ARM is crucial for building up their own AI capabilities. Maybe we'll see more like that.
So it sounds like the growth isn't just coming from one place. Where are they seeing the royalties really pick up?
Well, encouragingly, it's pretty broad. They reported growth across all their main markets: data centers, automotive, smartphones, IoT. That diversification, it suggests their tech is becoming, well, essential in a whole range of different applications.
And speaking of essential applications, AI is everywhere right now. It really feels like ARM's becoming a central player in that whole AI compute infrastructure space.
That's a really critical point. ARM architecture is increasingly the go-to choice for AI in the cloud. They're even suggesting that this year, maybe up to 50% of new server chips at the big hyperscalers will be ARM-based.
50%, half. That's potentially a massive shift away from traditional architectures in the data center.
It is, and they gave some concrete examples.
Like what?
Well, NVIDIA's Grace Blackwell, using ARM v9, is in full production now. Google's Axion, also ARM v9, is deployed in 10 regions, used by like 40 of their top 100 customers.
Okay.
And they're saying it offers significantly better price performance compared to base 86. Then you've got Microsoft's Cobalt 100 supporting major workloads.
Right.
And maybe the biggest signal, AWS said over half their new CPU capacity in the last 2 years runs on their ARM-based Graviton chips.
Wow, those are some heavy hitters really betting on ARM. It underlines that strategic importance for the AI backbone. But it's not just the cloud giants doing standard chips, is it? This custom silicon thing keeps coming up.
Yes, exactly. There's a definite move towards custom silicon companies designing their own specific chips. And a lot of them are using ARM's CPU, GPU, and crucially, their NPU, the neural processing unit for AI tasks, as the core.
Ah, okay.
So that trend boosts both their licensing revenue, because companies pay for the initial designs, and then their future royalty income when those chips ship. NVIDIA's DGX Spark AI desktop, powered by that Grace Blackwell superchip with ARM v9 CPUs, is a pretty high-profile example gaining ground.
So companies want chips tailored just for them, and ARM provides the essential blueprints. How's that custom trend showing up in royalties beyond the huge data centers?
We're seeing royalty growth driven by wider use of ARM v9 CPUs, not just in servers, but in various compute subsystems and smartphones too.
Okay.
Actually, smartphone royalties jumped 30% year on year.
30%?
Yeah.
It's much faster than phone shipments grew, right?
Way faster. Which again, it suggests the ARM tech inside those phones is getting more advanced, more valuable.
So it's less about just counting chips and more about the value of the IP in each chip. Interesting. What about other areas? You mentioned automotive earlier.
Definitely making progress there. And also in edge AI, AI processing happening closer to where the data is generated.
Right, not just in the cloud.
Exactly. They launched their first ARM v9 platform specifically for edge AI, a Cortex A320, and an Ethos NPU, and apparently major players are already adopting it.
Okay.
And in automotive, GM and NVIDIA are working together on ARM-based Drive AGX platforms for future vehicles.
Yeah.
Plus, ARM signed its first automotive CSS license.
CSS being the customer-specific solutions again.
Yeah, the custom designs. This one's with a big EV leader, letting them create tailored silicon for their next-gen cars. And the idea of a common CPU architecture from the car up to the cloud, that could really help car makers deliver cloud features more easily.
That sounds like a pretty compelling advantage for car manufacturers. What about the software side of things? All this hardware needs software.
Crucial piece, absolutely. ARM supports a massive ecosystem, something like 22 million developers globally. And their main AI software layer, Kleidi AI, has apparently surpassed 8 billion installs across ARM devices. Just shows the sheer scale.
Huge scale. Okay, so the fundamentals seem really solid. But, the wider economy, do they talk about tariffs, macroeconomic uncertainty, that kind of thing?
They did touch on that. ARM expects a limited direct impact on royalties and licensing from current tariffs because those usually hit finished goods.
Right.
But they admitted there's limited visibility on the indirect effects, like if supply chains shift and affect end demand. They estimate maybe 10% to 20% of their royalty revenue comes from shipments physically going into the U.S.
Okay, so some exposure, but maybe not direct hits.
Right. And historically, licensing hasn't been hit too hard by slowdowns, probably because chip design cycles are so long.
So what's their near-term forecast look like, given those potential clouds?
For Q1 of their fiscal 26, they're guiding for revenue between $1.0 and $1.1 billion. That's still, healthy 12% year-on-year growth at the midpoint.
Okay.
And they're forecasting really strong royalty growth for Q1, like 25% to 30%.
Wow.
But because of all the global trade and economic uncertainty, they didn't give full-year guidance, citing, lower visibility than usual.
Makes sense.
Despite that caution on the full year, they really stressed their confidence in continued growth, pointing to customer design pipelines, contracted royalty rates, and just that rising demand for custom silicon and AI. They're planning to keep investing heavily in R&D too.
So proceeding cautiously on the full-year outlook, but still pretty bullish on the core business drivers. You mentioned CSS, again, customer-specific solutions. Sounds like that's really becoming
It's
central.
absolutely central. Adoption of their latest architecture, V9, is now over 30%. And what's really significant is that CSS is becoming a noticeable part of royalties, and importantly, all CSS is V9 based. They're starting to see the first actual royalty payments from these custom deals now, and they expect it to be a really material growth driver going forward. And interestingly, the pricing for CSS is currently about double the rate of a standard V9 license.
Oh, wow, that's a serious premium. It really highlights the strategic shift towards working directly with the OEMs, the equipment makers.
Exactly. They see this growing trend, hyperscalers, car companies, others wanting custom silicon for differentiation for unique features.
Right.
And since most of the software on these platforms runs on ARM anyway, it naturally pulls ARM into closer relationships with these OEMs. They expect that to just keep growing, especially with AI demanding more and more specific hardware.
So the traditional chip companies still matter, but there's this whole other layer of customization happening directly with the end product makers.
Yeah, the fabless companies are still vital, but this OEM customization layer is definitely growing fast.
And that Malaysian government deal you mentioned earlier, that seems like a perfect example of this direct engagement.
It really is a big step to build up an ARM-based AI ecosystem in Malaysia. Giving startups access to ARM tech, even at that CSS level, could really accelerate things there.
Yeah.
And you wonder if other governments might look at doing something similar to boost their own tech sectors.
Interesting possibility. Looking through the rest of this fiscal year, what did they say about royalty growth expectations quarter by quarter?
Well, strong year-on-year in Q1, as we said. Then Q2, they expect it to be sort of sequentially flat, which is apparently typical seasonality for them.
Okay.
But then they're looking for pretty strong sequential growth, maybe 10% to 15% in each of the last 2 quarters of the fiscal year.
Okay, so accelerating again towards the end of the year. What about licensing? Beyond that big Malaysia deal, how's that side looking?
Well, they had record licensing revenue for the full year, driven by strong CSS demand, ARM just growing everywhere, and AI speeding up product cycles. Q4 licensing was apparently right in line with what they expected. And their ACV, the annualized contract value, which kind of points to future revenue, that was up 15% year-on-year in Q4. That's actually above their long-term target range.
Oh, really?
Yeah, potentially boosted by all the AI activity. Their official long-term target for licensing growth is still mid to high single digits, but they hinted that AI could potentially push them above that.
Got it. And did they break down who these CSS customers actually are? Where's the demand coming from?
Yeah, they gave a rough split. As of the last update, they had 13 CSS customers. About half were in client, mostly mobile, maybe some PC type stuff.
Yeah.
The other half were in infrastructure servers, networking, and now they have that first automotive CSS customer too. So it's pretty spread out.
It really is across the board. And briefly, the Stargate project,
Yeah.
the one with OpenAI, that sounds incredibly advanced.
It does. They said the collaboration is progressing well. ARM, specifically Grace Blackwell, is a key tech partner providing the massive compute needed for these next-gen AI models. And energy efficiency is apparently a huge factor in these massive projects, which is why ARM is the only CPU provider in Stargate. Kind of highlights that efficiency advantage.
A major validation. Lastly, chiplets. That seems to be a growing trend in chip design, breaking down big chips into smaller interconnected pieces. Where does ARM fit?
Right. Chiplets or multi-chip SoCs. ARM sees their AMBA interconnect standard as crucial here.
AMBA.
Yeah, it's the standard bus architecture for connecting things on an ARM chip. Since it's already the standard way to talk to ARM CPUs, it naturally extends to connecting multiple ARM-based chiplets together.
Makes sense.
And they also see chiplets as a big opportunity for their CSS offerings, because often a large part of the silicon in these custom multi-chip designs will be ARM IP.
So pulling it all together, it's clearly been a record-setting time for ARM. Strong growth pretty much everywhere, especially AI and auto. This custom silicon, the CSS stuff, seems increasingly vital to their whole strategy, leading to deeper ties with the big OEMs.
Yeah, that's the core story.
And despite some, fog in the macroeconomic outlook, the underlying business trends and their central role in AI seem to give them a lot of confidence moving forward.
Exactly. ARM tech is just so pervasive now, from phones to supercomputers. The market's always changing, of course, but their tech base and these strategic moves, they seem well positioned.
It really makes you pause and think, doesn't it? How this push for custom silicon combined with this almost limitless demand for AI compute, how that's going to reshape the whole tech landscape and, where investment flows in semiconductors over the next few years.
It's definitely something to watch closely.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.